Hello and welcome to Module 1, Part C, FinTech Innovations. So just before we dive into the module, I want to outline a good example of FinTech innovations in practice. And this comes from the Reserve Bank of Australia, the new payments platform. And it's you can check it out more at the nppa.com.au website. So some key things. Real-time clearing and settlement of payments. So for example, in the old days, you'd pay some money. It wouldn't clear the other person's account for maybe 3 business days. Whereas now you do a payment and you can see it in their bank account within seconds. Always on, so public holidays would cause trouble. Weekends would cause trouble, not anymore. Lots more data about these payments and easier ways to pay. So you might be able to pay someone just using their mobile phone number or an email or an ABN. So smoother, faster, easier. Now, climbing into some more detail, it's very complicated, and there's a great PDF available on how this all works on their website. There are full participants on the new payments platform, and it talks about if you want to be a full participant, what are the requirements? Now, if you start reading these, they are very complicated. So you need to have the RBA and ADI license. You have to do the KYC, which is Know Your Customer, and AML, anti-money laundering protocols, become a shareholder of MPP. And what it does is it allows you to participate in this process. Can you be an end user? Yes. Businesses and corporates can do this, so the payments can happen faster in items. So it talks about what you can achieve, what you do need to do. So you've got to register for Pay ID. Now, you might be thinking, I don't know anything about this process. Where is this coming from? And my advice to you is, you can read about digital finance, the theory in the textbook, but you have to go into real life practice to see how this works. You go to the Reserve Bank website, you follow this up, and you see how the infrastructure and the technology is actually put in place for an organization. So, for example, how do you get onto the new payments platform? And only in May this year did they publish the API framework. So how do we make this work? So APIs allow these systems to integrate, to talk together, so different software packages can share information. So it talks about the API framework. And there's a lot of things, and I'm going to show you some images in a moment, because every part of the financial process needs to be carefully mapped. And the software has to follow clear instructions. So you can see here, I quite like this in this report, all the different APIs that are available. Each of them does a slightly different task. And so all the different software that all the different providers use, if they follow this, can do a cancel payment. So you can see submit, get a status, cancel, return, get the details, give me an event, do a batch. All of this is technical documentation. Now, accountants don't have to do the programming in this area, but they have to understand how it works so they can talk with the tech people. They can piece these projects together. Now, putting an API together might take a day or a week or a month. So that is going to influence your project planning schedule. So what does an activity map look like? So for example, if a corporate needs to pay a supplier, you can see how they've worked out all the sequencing of activities, and it talks about the different banks, where the money goes, and what data needs to flow. So each of these steps needs to be programmed and data needs to flow through the system. Then another one, if you're going to make a payment to the ATO, what does it look like? Where does the coding go to do this new payment program, make it quick, easy, and efficient? This one is making salary payments to an employee. So you can see the simplest event of, when we do payroll, when we log in and we go pay someone, there's a lot of complications, but the great thing is it hits their bank account almost instantaneously. Corporates making a payment to a supplier, B2B, business to business. And you can see here the different color codings, clearing flows, settlement flows, API flows. And then what happens if a payment needs to be returned? So you can't just design a system to go one way. You have to look for fixes or bugs or problems. What if you try and make a payment and there isn't an account on the other side, or there's a mistake, or it needs to bounce back? Here's a corporate requesting a payment to be returned and a cancellation flow. And as you can see, it's quite overwhelming. There's a lot there. And if you dive into this PDF, it's 37 pages of APIs, activities, and flows. But that is FinTech for real, in action, to make a system that used to take 3 days to clear your funds instantaneously. So Module 1, Part C is focusing on FinTech. So we've got 3 objectives worth 20% of your exam. Module 1, 15 out of the 75 marks, roughly. And so make sure you dwell on them as you do your revision in your study. So Section 1.7 looks at FinTech in business. And it starts off by saying, what's the scope of FinTech? FinTech's one of those fancy words people throw around. You'll also hear about reg tech, wealth tech, insure tech. I find that a little bit lame, a little bit try hard to try. It's like calling it Internet 2.0 or it's just a little bit, whatever the word is, twee. But there's the financial planning realm. So helping people with online budgeting and retirement planning. Savings and investment, P2P, peer-to-peer, that means lending. So it's splitting out the intermediary and going straight between the borrower and the lender. Crowdfunding, online advice, online stockbroking, in payments, FX, crypto, borrowing, so online loans and brokerages and financing. And we used an example of that in a previous webinar where we see Xero. You might do your accounting software with Xero, and they can share that with lenders who can then quickly and rapidly approve your borrowings because they can access your finances, and then insurance as well. So that's the scope of FinTech. And I've already mentioned, so types of FinTech, new payments platform as an example, AI embedded and enabled analytics, machine learning. Now you're going to look at AI and machine learning much more heavily in Module 2 and 3. Real-time notifications, and that's really valuable. This real-time, not hindered by Sundays, not hindered by public holidays, not hindered by, it's 6 o'clock at night, everything's shut, and open data access. But on top of what the study guide says, these sort of 5 areas of FinTech solutions, there's plenty more. So this isn't from the study guide, this is just a search of what's going on in FinTech. And it's a busy slide, but it says here there are 3,301 companies. That's not all the ones in FinTech. That's just the ones that Venture Scanner, some corporate research business, has had a look at. So you can see consumer lending, business lending, personal finance, digital banking, POS, point of sale, payments, consumer payments, crowdfunding, international transfer, business tools. There's a huge realm of areas. And so it's an exciting time. Lots of businesses are popping up. A lot of them are not profitable. A lot of them have very cool products that are useful, but they'll need enough customers to make it effective. So over the next 10 or 20 years, we'll probably see that number of total startups declining and the best of the best rising to the top and being the major players. So FinTech versus traditional. FinTech do 3 key niche areas. And what they've done is they've picked the financial realm. Instead of trying to be everything to everyone, a fully integrated service, they've picked one area like payments or solutions or technology. So they're good at picking a niche. But one of the problems with that is you have to then combine lots of FinTech products together into a whole system. And that's difficult, complicated, and weary. So old tech is often a little bit out of date, doesn't do this as well, but they have deeper integrations. They do all of the financial services you need. So there is this sort of battle going on. And as FinTech innovates, the banking people, it's a bit like watching Mike Tyson training up again, getting ready to fight. He might be in his 50s, but he moves very, very well when he's motivated. He got himself fit and in shape. So a quick quiz question for you. Which of the following is in the top 3 largest public FinTech payments? So looking at the payments niche, not just any area, companies. They've all got cool names. Look at A, it's got integrated payment in the name. Is that a clue? FinTech, Chain Limited, Cashworks. Well, it's got Cash in it, and Zipco. And the answer is Zipco Limited. So the 3 biggest FinTech payments companies in Australia at the moment in 2021. Zipco, Afterpay, that's the middle one, cool little logo, and EML Payments. The other ones are still part of FinTech, but in different niches. So FinTech and Chain and Cashworks are in the solution niche, and integrated payment technology. Even though it says payment, they're in the technology niche. So a little bit of imagery to help drive your thinking. What is going on here? I hope you like this picture. So the roller skates to inline skates is an example of same but better. So that's one of the ways FinTech comes along. They can give exactly the same product that was previously available. but with reduced friction, less intermediaries, less hard work, less sharing of data, reduced costs and increased revenue. So a good example of reduced friction. In the old days, my father was a stockbroker, for example, and if you wanted to buy stocks, you couldn't just buy stocks on the stock exchange. You rang a stock brokerage and you would organize that. Now, a trade would cost at least $150, if not more. And so you needed to have a lot of money to invest. If you only had $300 to invest, you lost 50% of your money just on the trade. It's not going to pay a return. So you needed 10 and 20,000 or more to invest. So same but better is the online brokerages where you log in, place your order, and it's gone. Might cost $10 or $5 or free. So same but better. Then we have new. And so that's our hoverboard, I guess. That's a totally new product rather than just doing an old product quicker, faster, easier. Mobile wallets, banking the unbanked are two examples there. Now, a couple more strategic issues. Banks are often protected by regulation. So while the fintech sector are trying to innovate, the banks are also protected and the government wants it to go slowly. But the tension, a sort of tug of war, is that banks also, the government want to encourage innovation. So they want to encourage innovation, but they want to keep the system safe and working well and protect banks. And that's a complicated area to navigate. So in Australia, for example, we have the 4 pillars policy, which is about protecting our largest 4 banks from buying each other or merging or consolidating, so that we have at least 4 players. Now that creates a big oligopoly, and they're quite protected and they make good profits, but it also creates a much more stable economy. So it's good government policy, but it's not always the most efficient, and it certainly doesn't always encourage innovation. So that's the end of this section. I hope you found that quick tour of FinTech a helpful overview.